day. I'm Sunil Subramaniam, Managing Director of Sundaram Mutual Fund. I'm here to speak to you on our next product innovation. As many of you who have dealt with Sundaram Asset Management Company in the past will be aware that over a long period of time, we've been known as a fund house which has brought innovative wealth creating products to benefit you in your journey of beating inflation, as you say, for your future. Notable among these, as you know, has been the Sundaram Mid Cap Fund, the Sundaram Rural Opportunities Fund, the Sundaram Services Fund, which we most recently launched a year ago. And now we have chosen to reposition one of our existing funds, which is called as the Sundaram Global Advantage Fund, into a new product called the Sundaram Global Brand Fund. So what's new about this? The first thing that's new about it is that it's going to take your money and invest it in stocks outside of India. The second thing that when we take it outside India, yes, we know you're entering into a new sphere where you're not aware of the global economy, global stocks, what to do well. What we've chosen to do there is to choose to invest in global brands. This inherently means that the kind of companies we are going to invest in are strong consumer brands, which by virtue of their being selected by a brand rating agencies into the top, we are going to choose 30 brands in the world to invest your money, gives you a sense of safety. And let me explain this to you in a little bit. So when we choose these brands which are rated by global rating agencies, these brands achieve this rating because of various factors such as their familiarity up to many people across the world, the fact that they have consistently built businesses in various categories and they are not restricted to one particular country or one geography. The third part of these is that these brands, because of the fact that they have a competitive advantage, are able to generate superior returns to their stakeholders. Their cash flows are sustainable, and even if there are downturns in parts of the world, they are able to ride those downturns because they have built a competitive moat around their business model. This gives them a very good strength in terms of when they get listed in the stock market. So what we are going to do is that we are going to choose from brand rating agencies such as Interbrand or Forbes a list of the top brands in the world. Choose among them the top 30 that are listed in any stock market in an advanced country in the world and put your capital to use there. How will we practically implement this? As many of you may be aware, we have a subsidiary which is in the Singapore stock market, monitored and regulated by the Monetary Authority of Singapore, which already manages what is called as the Sundaram Global Brand Fund in Singapore. This fund, which has been in existence for the last 4 years, has already been investing in these 30 stocks and hence has built up a 4-year track record of performance. Based on that performance, what we have done is we have now repositioned the Global Advantage Fund, which had a very different investment objective, into one which now feeds into the Singapore Global Brand Fund. Now, from an investor's perspective, what value does this add? First of all, it diversifies you away from our home country bias. All of us as Indian investors have heavily invested in the Indian market, in the Indian GDP growth and our future. But there is a future outside of India which you should also participate because A, it will diversify your risk being only invested in India, and second, there could be countries and geographies, markets which are going faster than India, and this gives you a chance to access those markets. That's number one. Number two advantage for an investor from investing here is when you are choosing only the top brands, right? You automatically means that you are choosing the largest of the largest caps in the world. Just to give you a sample of the kind of size we are talking about is that just the 30 brands which are currently in the Singapore Global Brand portfolio today have a market cap of $8.4 trillion. And while this number in $1 trillion always sounds very fantastic and huge, just to give you a sense of perspective, the entire Indian stock market's market cap is $2.1 trillion. So just 30 of these companies have quadrupled the market cap of the Indian stock market. So what it helps you do is to play the game of the real big companies in the world. And as you know, larger companies give you a sense of portfolio safety because they are far less volatile than smaller companies, because they are able to ride over cyclical downturns, they are able to be present in multiple geographies, so that in itself gives an inherent risk diversification to their earning stream, which by buying those stocks, you are able to participate in. The third advantage of this is that to buy this big play of the largest stocks in the world, you don't need to invest big. Because through our fund, what we have done is made it very accessible to a retail investors like you, and said that you need to invest only 100 rupees, either in the form of lump sum or SIP, to be able to have an ownership of some of the biggest companies in the world. To give you a sample of the kind of names in the portfolio, right? Apple, Amazon, Alphabet, which is Google, Facebook, BMW, Honda, Toyota, Coca-Cola, Pepsi are some of the names, McDonald's are some of the names which feature in the current portfolio and have been featuring there for over the last 4 years. So think of it this way, that as an aspirational value, right? All of these brands I talk about, think about how many times in a day or how many times in a month you actually touch and use their products. Right? You must be using Google through YouTube, Google through Google search, Google through Fitbit, which they own, and a number of such things. Right? Similarly to Pepsi. Pepsi is not just a soft drink Pepsi. Pepsi also has a mineral water company in India which you buy, Aquafina. Pepsi also owns Lay's. Pepsi owns Pizza Hut. So these brands, right, which you touch every day in the course of your normal life, here's a chance for you through this fund to become an owner. So this fund will also give you that sense of aspirational fulfillment that a lot of these brands which you touch, which are among the big aspirational companies in the world, you are able to be a part owner of these. The other reason to buy this fund, right, is the fact that many of you, as you are growing older and your children are getting exposed to the modern things of the world, have an aspiration to send them abroad for their further studies. So if your child is 5 years and in 10 years time they are going to go for undergrad abroad, or if your child is 10 years and in 15 years time you want to send them for their postgrad abroad, the money that you need to build to finance their international education, if you do to choose only India as an investment destination, the risk is that as the currency of India depreciates over a longer term, you would stand a chance that your corpus would not be adequate to meet that need. So either you need to send money outside to invest it in a dollar or a hard currency, or you can choose to invest in this fund through an SIP for a 10-year or 15-year period, because this fund carries the advantage, since it's going to remit your money immediately to the international markets to invest, any depreciation of the rupee will straightaway translate into the net asset value of your domestic fund. So inherently you're getting a hedge against any potential currency depreciation. Now you'll say, sir, the currency can appreciate. Why are you talking only depreciation? So let me introduce you to the world of how currency rates are decided in the world. In the short term, there are flows, FIIs, bring in money, Indian importers, import oil, which gives a balance to the currency's demand and supply. But over a long period, the rules of economic state that the difference in interest rates or inflation between two countries decides the exchange rate. And just to give you a sense of what that is, the US 10-year interest rates are around 2% for the government of US to borrow, and for India, for the government of India to borrow, it's about 6.5%. So the 4.5% rates difference today, if this persists for 10 years, then the fundamental laws of economics and currency measurement say that the Indian rupee must depreciate by the difference in rate, which is 6.5 minus 2, 4.5% per year. Not to say that it's definitely going to do this, but the potential as per fundamentals is that the Indian rupee, being in a higher inflation, higher interest rate country than the US, the currency will have a tendency to depreciate. So that's another reason why you should choose this fund as one of your investment vehicles in planning for the future. Now, I talked about scale and size. Also wanted to tell you, while for 100 rupees, what are you getting? Is that if you want to buy 100 shares of these 30 companies today, it will cost you $700,000, which in today's 70 rupee rate translates to 5 crore rupees. So what we at Sundaram are trying to do is that, because we believe that retail investors are the ultimate people whom we want to benefit and work for in the wealth creation journey, we believe the products we do, we must make it easier for retail to also participate in something which HNIs can very easily do through what is known as the liberalized remittance scheme of the government of India, where they can remit $250,000 outside. But to a retail investor, this gives you a simple, easy to implement, lower value methodology to gain access to the world's top companies. So I think that in summary is my pitch of the fund to you. I would strongly urge you all to talk to your advisor, come to our website, look at the fund and its fundamental attributes, and it's very easy to invest. So at the click of a button, you can get access to the top brands of the world. So as our advertising campaign, which you might have seen, tells you, here's an opportunity to own the brands that are trying to sell to you in your everyday life. Happy investing and welcome aboard. Thank you very, very much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.